Hey, welcome everyone to our webinar for the TAP session. Hopefully by this time you guys have all enjoyed the course and learned a great deal from it. Um, Again, if you have any questions on the material you have covered in the course or anything in technical trading, feel free to shoot me an email or send one to Mentored Research and I'll get it anyway. And I will answer those emails. Hopefully things are much more clearer now as far as what technical analysis is and how it is different from fundamental analysis. And it has given you an idea of what trading is like. Again, I like to repeat that what you have learned is it covers a lot, but it is not meant for actual going in the markets and putting your money. You need to practice a lot. Maybe open up a dummy account or something and play with dummy money and just try to practice all the concepts you have learned in the program. And once you consistently find yourself making profitable trades, then you can put your hard-earned money into the markets and use your knowledge. But until then, it's practice, practice, practice. Keep looking at the charts, and eventually you're going to train your eyes to notice the patterns, notice all the signals, notice the moves behind the market, and understand why things are happening. And hopefully that will start you on a very profitable journey. Okay, so with that, I have a few questions from one of our students, and I'm going to pull them up here. Hopefully this will help everyone. The first question here was a chart of Siemens. There is a triple top pattern is observed at the end of the chart, and these are the questions that were needed to be answered, and the student had some confusion about it. And this is from her, I guess, from her coursework somewhere else. So hopefully answering these questions will help other people too. So I'm going to include them in here. I have tried to pull up that chart for Siemens, and I think I see what that question is. I'm using Chart Nexus here, and this is the chart of Siemens, and this does look like what is shown in the chart that was provided, the triple top pattern right here. So I'm going to just use Chart Nexus here to show that pattern. So here it is, the triple tops, 1, 2, and 3. And if you draw a horizontal line here, you should make it probably more horizontal. This is a nice horizontal neckline. This is close enough to the neck, this is on the neck, and here's breaking of the neck, and these are the triple tops. So let's look at the questions and see what they are. The first question is, does the volume confirm the triple top pattern? So looking at this, here's the volume on the side, on the bottom, and here's a break of the triple top right here. And if you notice the volume, that's pretty huge volume. That's a significant volume compared to the average trading volume. You do have a few days here when volume was high, but this one is pretty exceptional compared to the average volume. So I would say it is the volume. It does confirm the breakout of the triple top pattern. Answer to the first question. Where should be the support level for the triple top pattern? So in this triple top pattern, usually the neckline is the support. Notice how the support here, and keep in mind that this support level is exactly the same as where the stock was facing resistance before. If you look back in this chart, here's resistance. Maybe I can use arrow. Here's where it acted as resistance level. So as we know from our course, resistance once broken should act as support. So that is what exactly where the support should have been in the triple top pattern, and then the pattern would set to be complete once that support is broken, which they eventually did at this point. Has the price breached the support level at the end of the pattern? So I would say yes, it has breached the end of the pattern. It has breached the pattern, and the pattern is complete at that point where it breaches it, just like the double top pattern that you studied in the course. Now this is a very nice example of once support is broken, resistance again. So once support is broken, the bulls will try to rally the stock back up and test that initial support now as resistance. So the bears will come in here and try to knock the stock down, which it looks like they're doing a lot of dojis and signal right there. So at this point, everything seems to be going textbook style for this book, for this chart. And what's the next question? What position, long or short, should the trader take if the support is breached? Once the support is breached, you have to take short position. So at this point, if you're short, you're keeping your stop loss above this support level. If in case the bulls do come back in and try to take it, try to go rally the stock again, you don't want to be in the stock for too long. At this point, it does look like the bulls are failing again at your resistance level. So at this point, you would still be short the stock if you haven't already taken some profits. But this would, if you shorted the stock right here, you could have taken some profits off and still keep on holding some remaining position. And if it does go above a stop loss level, you would be out of the remaining stock. It does look like this has a nice potential to start going back down here. To reshort the stock at this point. And then the last question is, what should be the target price? Now, in a triple top, just like a double top pattern, the price target is usually whatever this, whatever this level is, which was about, I calculate, about 180. Now, remember that these needn't be exact numbers because the market's never going to do your exact numbers. So it's roughly in the range of about 180 points from the top to the neckline. So the eventual target for this would be from the top, from where it breaks the support, you figure in 180 points to the downside, and that would be your target. So your target is around 1100, 1110, somewhere in that range would be your eventual target. Okay, so hopefully that answers your first question. And then the next question is about Reliance, and I tried to find this stock in the chart, but I could not find this particular. It probably goes back a little ways. This is not a recent chart for Reliance. Excuse me. So I'm just going to look at this chart and answer as best as I can. The line chart for Reliance Industries shows a price pattern, assuming that there was a downward preceding the pattern, downtrend. You are required to briefly explain about the pattern. So I believe we have already done this in the technical analysis session. This is like a symmetrical triangle pattern. Usually it's a continuation pattern where the stock is just making lower highs and making higher lows. So this is usually considered a continuation pattern, and it will break. And this makes sense that this was in a downtrend in the preceding to this chart to the downside. Excuse me. So the next question is, comment on whether the volume confirms the pattern. At this point, it doesn't look like the volume is confirming the pattern. We do have huge volume back here, but the recent volume where it broke the support area. Excuse me, I'm just going to be back with a sip of water, so hold on one second. All right, sorry about that. Apologize for that. I didn't want to keep coughing. So, all right. So, as I was saying, the volume here really doesn't confirm the breakout. So, I wouldn't be afraid. I wouldn't be surprised if this is a false breakout. But at this point, just going by the pattern, it does look like a breakdown, but the volume doesn't support it. Comment on what position should the trader take when the breakout occurs. So at this point, if I was normally going to short 100 shares of this stock, I would just go with shorting 50. Okay, I'll reduce my position size in this case, just because the volume is not confirming this breakdown. So I would still short it just because it has broken the pattern, but with a smaller position size. So you got to keep in mind that trading is an art, right? So you have to manipulate quite a few variables to increase your probabilities of success in this game. So in this case, since all the probabilities are not lining up for me, all the conditions are not right, what I can vary is the position size that I have control over. So instead of going shorting 100 shares, I'll probably just short 50 shares because I am not sure if this down move is real or a head fake. Okay. And then you can identify the price target. In this case, usually what you'll do is, let me see if I can draw here. Shapes, line. Okay. What you can do is measure this height of this triangle at the base here. Usually, then when it breaks it, it'll go down about the same height. Okay. So if this is whatever it is, 100 rupees or 200 rupees or whatever, this breakdown here should be about that. Remember, it's a target, doesn't mean that it will actually achieve it. But that is the initial target that you should plan for the trade. Okay. So hopefully those answers your question. Again, if have something else, you can feel free to email me, and I will respond back. So those were the two questions from that student. Other than that, is if there's anybody else on the call and they have any questions, feel free to ask. Otherwise, I just have a couple of stocks I wanted to show, like Sale. Here's a stock like Sale, and this is showing the Ichimoku system. And remember that we looked at the Chicago breakout method in the Ichimoku system. This is just to show a recent example of where you could have invested in this stock. Let me draw a line. Here's the point where the Chicago has broken out of your congestion area, and the candles have broken out of the Kumo. Everything in alignment. These are one of those things which you can take advantage of. Okay, it follows your Chicago guidelines, breakout guidelines. So nice move up after that breakout. Here's one more stock that I wanted to show is Rain, just to show that how long these trends last, right? So here's where you had your initial Chicago breakout, right here. Chicago broke out through that congestion area, which corresponds to this point right here. Okay, so buying it right there. Look at how it has been being guided up by the Tenkan and the Kijun. So at this point, though, this is telling me that exuberance is coming in the stock. I would be very cautious at this point. If you have this position, you should be taking profits here. At least maybe 75% of your position should be out at this point. There should be some consolidation, just given the fact that how far the stock is from the Kijun. Usually when stocks go parabolic like that, it is towards the end rather than towards the beginning. So at this point, I would definitely be taking profits on this stock. But just notice these kinds where you have the breakout, you have clear indication to get in, and then and then it follows your keygen up. So again, hopefully this course has taught you a lot of strategies like this that you can practice until you get good at it. Okay, let's see if there's any. Okay, what I have one more question here, which is stochastics are oversold. Why is it considered a bullish signal? Okay, the question is, when stochastics is oversold, why is it considered a bullish signal? For that, let me go back here. This is one of the slides from your course. Just look at the formula for what stochastics is derived from. You're looking at the close minus the low, and you're dividing it by the high minus the low. So essentially, in a nutshell, you're just looking at where the price is in comparison to where the price has been in the last n days. Okay, this n can be anything. Most people use 14, 12. It just depends on how far back do you want to look at. So let's assume it's 14 days. So it's telling you, the stochastics number is telling you that in the last 14 days, if the stochastics is near zero, it's telling you that the price is now in the lowest portion of where it has been in the past 14 days. Okay, what that is telling me, it has been continuously been selling in the last 14 days. So that's why when stochastics are oversold, it's considered to be a bullish signal, because there's only so much selling people will do. Now, having said that, stochastics can remain oversold for days, for weeks, and yet the stock will not reverse. Okay, so it could just hang in there and move sideways, and the stochastics will start improving, because again, it's just a mathematical number, right? So even if the stock doesn't go up too much, even if it just drifts up a little bit, it'll improve the stochastics number. But does it really mean that the stock rallied? No. So all the stochastics tells you is where the stock is right now in relation to where it has been in the past so many days. So if it's a very, very low number, that's usually below 20, it's considered to be oversold. And when it's oversold, then there is a good chance of it reversing. Okay, that's the only implication. That's why we never ever use stochastics or RSI or MACD. We never use these indicators as primary factors. Okay, they are only secondary factors. Now, some couple of people have, when they submitted assignments, they looked at stochastics and made them as the primary factors. That is not how these guys are supposed to be used. They are only confirming indicators. So when you see a candlestick signal, the candlesticks are your primary confirming indicators. When you see candlestick signals and then the stochastics confirm it, then it's a good situation to buy or sell. Okay, you do not look at stochastics if it's oversold and you buy without a candlestick signal. That's not how they are to be used, because stochastics can say overbought, they can say oversold for weeks, days and weeks at a time. So hopefully that answers the question. Let me see, there's another one. Meaning of reversal and consolidation break and exhaustion break. I am not really sure what that means. Reversal is pretty simple to define. Consolidation break. Let me look at this chart. There is no consolidation break on this one. Let's just look at Reliance again. I'm just trying to see if I can find any consolidation here. Look at LNP. Here's what I could define as a consolidation break. Let me lines here. Here's a pretty tight consolidation pattern. Okay, so at this point, when they break that pattern, I'll define it as a consolidation break. Here, notice what the stock has been doing. The stock is just consolidating back and forth. It really is not trending. It's not in an uptrend. It's not in a downtrend. It's just undergoing consolidation. Okay, so at that point, when they break it, either to the upside or the downside, when the patterns consolidate, there's no way to say if it's going to break out or break down. So depending on where it actually breaks up or down, a trader can initiate his position at that point. Okay, in this case, it happened to be on the downside, strong bearish candle. So this is a nice consolidation break. So that's what I would define as a consolidation break. Let's see, what is exhaustion break? I'm really not sure of what an exhaustion break is. Never heard that term before, so I'm going to skip on that one. And rule to identify valid peaks and troughs. Identify valid peaks and troughs. Now, one way to identify valid peak and trough would be volume, because let me see if I can put volume on this guy. Okay, there's volume. Let's see. All right, so here's notice the huge volume here. Okay, so if this stock, as you see, it's heading down, you form a doji, a morning star signal here. Volume is huge at this point, right? So that would be a valid trough for me. When there is a big volume, and then I see a candlestick signal. Remember that if a signal, a line chart, there is really no information there. Okay, so just a valley, even with a good volume, if I see a valley or if I see a peak, I really don't give too much credence to it if I don't see a candlestick signal. So this one is a good signal for me. This one is a morning star signal with huge volume confirming that valley. Okay, and then at that point it rallies, but I also know that here's resistance coming down. The keygen is resistance, so that would be my target. Okay, now keep one thing in mind, that if you see a candlestick signal, you don't really, if you see a candlestick buy signal, doesn't mean you actually have to buy, given the fact that it's in a bearish environment. Okay, you never try to buy stocks which are in bearish modes or bearish trends. You always buy stocks on candlestick signals in bullish trends. Stocks, okay, you always short stocks when they are in bearish trends. So if for a stock like this, if it's below the Kumo, now that you've already learned about Ichimoku, if it's below the Kumo, you already know it's a bearish stock, right? So if it's a bearish stock, you are looking at opportunities to sell. Here's a bearish engulfing. You're looking for those kind of opportunities. Okay, here's a breakdown from the Kumo, again a bearish engulfing, a doji followed by that. Okay, so those are the opportunities you're looking for. You're not looking for opportunities to enter into a bullish engulfing signal. That's the difference between theoretical knowledge and practical knowledge. Okay, in theory, you see a candlestick buy signal and you buy. That's not how it's supposed to be worked. Okay, you don't try to swim against the current in a river. Okay, so you are trying to find for shorting opportunities in a downtrend and bullish opportunities in an uptrend. Okay, so keep that in mind. So I would say, again, going back to your original question, a volume would be one confirming indicator if it's a real trough or a bottom. But again, I would want to see a candlestick signal at that point to confirm that. For example, here, right? I know there is resistance at this point. Here's a peak, right? You can define this as a peak. Now, what's confirming that? Here's a nice doji and an evening star signal, right? That's what you need. And look at what happened following that, right? So those are the, I place a lot of emphasis on that candlestick signal. If I don't see the candlestick signal, I don't really define that as a value or give that much credence to the value of P. Volume and candlestick signals, especially if it's happening on a resistance points like a Kijun or a 200-day moving average or a 50-day moving average, things like that. Okay, so the question is high probability scenario. Okay, let me erase all this stuff. Okay, so again, a high probability scenario is nothing but technical conditions coming together at the same time. Okay, just like in this example, you have resistance of the Kijun, right? You already know, first of all, you know that it's in a bearish trend because it's below the Kumo, right? It's below the Kumo, it's below the 50-day moving average. So you are looking for bearish stocks. Now what happens is you see this doji and a bearish engulfing right at the Kijun, which is your resistance point. Now that's a high probability scenario. You already know it's a bearish trend. You have seen a candlestick signal at resistance, right? The Kijun is resistance. So, and then you get a confirmation. So that is a high probability signal. Another signal is right here. Okay, here's your 50-day moving average. It's below the Kumo, so you're looking for bearish signals. It's below the Kumo. Here's a doji at the Kumo, and the doji is followed by a bearish candle. Okay, that's another high probability signal that it's failing at key resistance point, like the 50 and the Kijun coming together here. So those are two huge resistance points coming together, and then the bears have shown you that the decision is in favor of the bears after a doji. What does the doji signify? It signifies indecision. After the indecision at this resistance point, the decision was made in favor of the bears with this bearish candle, right? So those are high probability scenarios to go short. Now, see if I can give another example. Let's see. What is it? Tata Steel, let's say. See if you can find any nice signal on the 50. You could also define this as a high probability scenario. Here's this is your, you already know at this point the stock is, rather I should make it like this, above the Kumo, so it's a bullish. You need to be finding bullish patterns in here, right? Since it's above the Kumo, this is Tata Steel. If it's above the Kumo, here's consolidation, right? It's a break, small consolidation going back and forth right here. It waits until it hits a strong support area of the Kijun and the Tenkan, right? As soon as it gaps up, what does this gap indicate? I believe you already have seen gaps in your course. The gap here is indicating that the bulls are coming up with strong force and telling you that this resistance area is no longer resistance. Decision has been made in favor of the bulls with that gap. Okay, so that's a very high probability scenario for me, that I already know that it's a bullish stock because it's above the Kumo, right? It's a nice trending Kumo here at this point. Even the future Kumo is bullish at this point. So I already know those things. And now they hit the Kijun here and closed above this resistance area. And the next day they opened it with a gap up. That is a very high probability scenario for me. Okay, that the bulls are in control. So once you buy it here, you're just holding and probably get out here, right? It's closing below your support level, so you made this nice run from here to here. So that's how a trader thinks like. Okay, so hopefully that makes it clear. So it's basically a confluence of 2 or 3 things coming together to give you a buy point or a sell point. Okay, hopefully that makes it clear. If not, again, feel free to email. Let's see, is there anything else? Yeah, that looks about it. So again, hopefully you guys have learned a lot, and that will help you in your trading journey. And feel free to ask any questions via email. And okay, let's see. What is this meaning of rallies? And rallies is just this. This is a rally right here. There's nothing more to it. Usually in a trending market, you'll have rallies, whether it is in a bull trend, you'll have rallies. In a bear trend, you'll have declines. Let's see, there's a decline on this guy. Here, this is a decline. So that's all those two terms mean, is a rally and a decline. That's a rally, that's a decline. The key is I would strongly urge, if you guys are going to be looking at chart, I would strongly urge put in an Ichimoku system on there. Even if you don't even look at the Kijun and the Tenkan, and some traders do that, they don't look at the Kijun Tenkan, but they just put the cloud in. Okay, the cloud gives you an indication of, is it in a bullish trend or a bearish trend? Okay, it's an immediate indication. So you don't have to think about whether the stock is bullish or bearish. As soon as you see it's above this Kumo, you know it's bullish. You know you have to go for bullish strategies. And then if it's below the Kumo, what was that again? Did somebody say something? I'm sorry, I missed that. Probably not. Okay, so I would strongly urge you guys to do that. Put the Kumo on there and use that as a starting point. And then after that, you can use your 50-day moving average, your 200-day moving average, and trend lines. I obviously use the Tenkan and the Kijun heavily, so I would recommend using that. And then just notice, right? Notice things like these, the gaps, very powerful in trading. So consolidation patterns, triangles, they all help in analyzing what the market is, what is happening in the market behind the scenes. Okay, so you have to use all that knowledge and put it together to trade. It can't be just one thing or the other. So, all right, that should do it for today, I guess. Anything else